Good afternoon and welcome to QuickTake Stock. It's the show for retail traders eager to get smarter. I'm Katie Greifeld.
And I'm Tim Stenevec. Stocks lower again today, but once again, the big story is big tech. As we continue to see the big tech names getting sold off, check out the underperformance right here from the NASDAQ 100 versus the S&P 500 and the Dow. And indeed, we have seen stocks off of their session lows right now, but still, that big tech story is the one to watch. We're going to dive deep into that. It's all happening as investors are trying to make sense of this mixed jobs report that we got this morning. We're going to have more on that in just a few minutes. First, though, Katie, we got to talk about Bitcoin because the slide lower, it just continues. We're at September levels, is that right?
At September levels,
Wow.
and when big tech falls, so does Bitcoin. That is what we are seeing today, but man, look at this chart behind me. I'm going to put on my fake technical analysis hat, and I'm going to say this is an upside down V pattern.
Okay.
Not what you want to see. Bitcoin is now down over 41% from its November highs of close to $69,000 a coin. It did break below $41,000 a coin briefly this morning. It's stabilizing a bit now, but we'll see how far this goes because you are seeing tech stocks sell off again. You have a lot of nervousness about the Fed. I know we're going to get into that a little later in this block, but Tim, remember, this is a market that loves round numbers. So the number to watch here is $40,000 a coin. I would imagine you're going to see a lot of support and resistance around that level in particular. Can't wait to see how it plays out. But Tim, if we're talking about crypto, there's another huge story out there today, right?
Yeah, you're watching Bitcoin and crypto. I'm watching GameStop shares higher today after the news late yesterday that the meme stock darling is getting into NFTs. You can see shares higher by about 5% right now. And after hours trading, when this news emerged, we saw shares spike upwards of 20%. So we don't know much about what GameStop is doing exactly when it comes to NFTs. The Wall Street Journal reported, though, yesterday that it involves talks with crypto and blockchain operators about what tokens would be accepted on its marketplace, as well as the setup of potential funds, each of up to $100 million to invest in NFT content creators and game studios. Let's get more on this, and we're going to go to Rod Alzmann. Rod is managing director at Wook Capital and also the co-founder of GMEDD, that's GameStop Due Diligence. It's a website. It was founded back in 2017 to, quote, immortalize the research and high-quality due diligence that the community put into the investment thesis. Hey, Rod, this news yesterday probably didn't surprise you that much because back in October, GMEDD had this story that said that an NFT marketplace is underway. So help us make sense of what this is. What exactly is GameStop going to do when it comes to NFTs?
Yeah, Tim, good morning. Just a quick correction. The website's only been up since January 21. I had been invested since 17.
Okay, thanks.
But, with regard to the marketplace, it's definitely a big question mark. I think that people like us at GMEDD have been watching very closely what the company's been doing and have been expecting some more formal announcements from the company anytime now. That anytime now has felt like a while. But they've clearly been hiring people in the crypto space since the first half of 21 when they launched the NFT.GameStop.com. And it does look like their play is to try and get some economic value from the creator side of this digital market. Obviously, we saw OpenSea get a Series B, I think, offer recently at what, 13.3 billion valuation. So that's up from like 1 billion in the first half of 21. So clearly, there's a lot of money flowing into the space, and GameStop's looking to be a part of it.
And Rod, how does this fit into Ryan Cohen's vision of transforming GameStop into this digital-first marketplace for games? I mean, do you see this NFT push as complementing that strategy or distracting from it?
I do think it's complementary. I think that the intention is to make all things interacting and interfacing with GameStop just a seamless, delightful experience for end users. And right now, if you've tried playing around in the world of NFTs, it's anything but a seamless and delightful experience with regards to all the various scams, poor user experiences on just trying to navigate all things blockchain. I had never interfaced with anything crypto or blockchain until just a few months back. And it was a complete headache trying to onboard and learn and understand it. So I think that's one vector. They're going to look to make this very seamless. They have tens of millions of PowerUp Rewards users. They have mid-single digit millions of paid member PowerUp Rewards. That's their loyalty program users. So I think from an onboarding standpoint, that's going to be a competitive edge for them if they can easily and readily and cheaply onboard any percent of those users into a crypto marketplace. the news from yesterday that Wall Street Journal initially reported on is definitely interesting. It looks like they're going to potentially be doing some independent development. They're obviously bringing a lot of creators into the fray, whether it's explicitly gaming related or just digital collectibles. They have a physical collectibles business that's closing in on a 1 billion revenue run rate. So there's definitely a digital collectible opportunity that's popped up over the last couple of years that I think they're going to take a slice of as well.
So, Rod, like you said, assuming this is a tailwind for them, a competitive edge, this NFT marketplace, do you think that's enough to sustain the shares? Because, GameStop closed up to 700% last year, popped a little bit on this news. Many a Wall Street analysts would tell you that this stock is completely disconnected from its fundamentals. Could this really be a meaningful catalyst?
Katie, look, if you look at the income statement and you look at it in isolation and you weren't paying any attention to what's gone on at GameStop, from both them bringing in the new leadership that's now been replaced in early 2019 to what happened in January 21 when they had Ryan Cohen effectively have a bloodless coup, right? They had a settlement with Cohen where he took 3 seats on the board. Within a short time, he became chairman of the board. The board and the senior management was very rapidly revamped in what I believe would be his viewpoint. And they've made hundreds of hires from senior management levels on down. So they've very rapidly restructured what GameStop legacy is, and that isn't yet flowing through on the income statement. So I can appreciate why many analysts are saying, because we haven't heard enough detail from the company, this is all smoke and mirrors. But my counter to that would be, what is it that Cohen's telling all of these hires from Amazon, Chewy, Zulily, et cetera, who are joining? Is he just blowing smoke? I don't think so. I think the company's told us, though, that the primary metric to gauge them on will continue to be top-line revenue. I think they're going to continue to degrade their margin take for some time. Told us, though, that the primary metric to gauge them on will continue to be top-line revenue. I think they're going to continue to degrade their margin take for some time. So gross margins, I expect to continue to come down. Partially, that's a function of mix as pre-owned gaming continues to decline because of what everyone understands to be the shift from physical game sales to digital. But that doesn't mean the company's dead or dying. I think it just means there's a lot to unpack, which we've tried to do over the past year or so here. But you're right. If you look at the numbers in isolation, it really doesn't look like a promising opportunity. I would agree with that statement.
Okay, so that kind of brings me to my last question. A move like Rod, and this is a show for retail investors, I'm wondering how you think retail investors should respond, will respond. After all, critics could easily say perhaps that a move like this looks a little desperate.
If it were out of the blue, it could strike me like that. It's certainly not out of the blue, and it's in line with what they've been doing for many months now. So I think it's a logical and rational continuation. They did raise meaningful capital from mostly retail investors earlier in 21, twice. So they have a significant amount of cash in the balance sheet to fund these initiatives. And there's no solvency. This is a continuation of a deliberative approach to grow into a new market. Launch products with partners, these various crypto companies that are being reported that there's a couple of partnerships imminent per, I think, Sarah's reporting from Wall Street Journal. So I don't view it as smoke and mirrors. Now, there's another meme stock out there who continues to do things that I think are smoke and mirrors with a movie token company. But I believe GameStop's is actually legitimate. Now, it remains to be seen how NFT gaming goes, right? Ubisoft launched news that they're going to be exploring NFT gaming, and I think the gamer reaction was broadly very negative. I do think broadly gamers are suspect of NFTs because they view it as, are you just going to try to milk me out of more downloadable content? And I think that there's both an education and a messaging mismatch going on. So they're concerned about publishers screwing them, they being gamers. I think if GameStop can be that agnostic medium where they're inviting creators, they're inviting publishers, they're trying to kind of be the marketplace, they could do something special. I think it's a legitimate project that they're working on.
Rod, we got to leave it there. There's no one else I could imagine wanting to talk to more today, though. Thank you so much for your time. That is Wook Capital's Rod Alzmann. Well, let's check back in on Bitcoin, down about 2.6% at the moment. For that, we turn to Stefan Ouellet. He is the CEO and co-founder of FRNT Financial. It's a service for institutional investors looking for exposure into crypto and other emerging markets. Stefan, great to see you. Let's start with that number, 40% drawdown from November's high. What is going on with Bitcoin?
Hey guys, how you doing? I think that the crypto market has become largely macro watchers over the last couple of weeks, similar to other asset classes. While there's usually a lot of different stories distracting crypto investors, right now we seem to be looking at the same thing everyone else is.
Should we be watching for a technical level here, Stefan? I mean, should we be watching for a $39,000, for a $49,000 level here? What stops the bleeding, for lack of a better term?
Yeah, I heard Katie on the last segment say, it's a market that watches large numbers, and it really is. I think that's a product of the fact that people are still really learning about this market, and so they, in panic situations, we do tend to see a lot more activity around those large numbers that we would see in an equity. From a trend line perspective, though, I do think that if we did trade through 40, I do think there is support below that, and we do see a lot of head fakes in crypto. I mean, this summer, 30,000 was such an important level on the downside, and I mean, it was just painful how long it toyed with it. And we see head fakes, and technicals are tricky in crypto for other reasons, I'd say.
And Stefan, I love how you phrased Bitcoin as sort of this macro asset. You're really speaking my language. And if it is a macro asset, I'm curious what happens when the Federal Reserve finally starts hiking interest rates? Because we haven't seen that in a number of years. Bitcoin and other cryptos have really exploded in that time. It almost feels like we're setting up for a really big test of the entire crypto thesis here.
I think you're completely right about that. I think that, we've talked about this a bit, Katie. I think what the crypto market is waiting for is a lot what other risk assets are waiting for. It's really a question of, is the Fed really serious about this? Since the financial crisis, we've seen several attempts at some kind of tapering that have led to equity market declines. Is going to double down on this quite aggressive tightening plan that they have next year. And at that point, I think we will get a better handle on whether or not the crypto story is fading. And yeah, as you mentioned, I think that some of the more some of the newer coins that have had large valuations are going to be the ones that really get put to the test, as opposed to some of the more mature assets like Bitcoin and Ethereum.
All eyes on the Fed, all eyes on altcoins. Stefan, we have to leave it there, but it's great to get some time with you on this Friday. That is FR.